My name is Scott Forcino. I'm an associate broker with eXp Realty. I founded PlugIntro because I needed to meet more people. I needed to have a really great offer and a value for them to want to hear from me. I have a great friend on the video with me today, Eric Sturkin, who is a pro in the credit repair and business credit firm with Better Qualified. And I want to hear what he thinks about this really important subject that's changing daily. Hi, Eric. Good morning.
Hey, Scott. Thanks for having me, brother.
Yes, sir. Yes, sir. So tell us about you, your background, and how you positively assist lenders and buyers.
So long history, right? I'm going to be 52 in April next month. So it's like, wow. Doing this for 17 years, which is, the credit industry space, let's call it. But, consumer side, 17 years, business side, probably about, 12, 13 years when we started building our own for the business, for Better Qualified. I stumbled upon it and said, oh, this is a great, something great for all the businesses we do business with, because most of my guys come from the mortgage world and also the real estate community. So most of us are, self-employed. Back then, it was more people were self-employed. But then, they corporated the banks and some of you can no longer be a 1099. So, but on the real estate side, you still have a lot of broker owners and a lot of, top people that have their other businesses. And again, on the business credit side, it's an amazing thing for the tax ID, but we'll get into that. But my partner and I founded it, Better Qualified, 17 years ago. We've been involved in most associations across the country. He's on TV a ton. Call him the nation's credit repairman, as Varney called him. It's got to be 7-8 years ago now.
Sure.
I'll never forget that first, and it was live, which was kind of cool. On Fox the day before Thanksgiving, and it was, he called him the nation's credit repairman by himself, not, coming in from experience, but we have worked with a lot of people you see on the news, fixing their own credit. Some pretty crazy stories that I could tell you. I won't tell you names, but, somebody bought a fur coat, returned a fur coat, and it didn't get credit on the credit card. So the minimum was made, and it was pretty wild. So, but it never shouted us out. I always said to Paul, we'll do this, we'll take care of them, but, make it straight that, when we do get credit for it, or when we do it, get credit for it on TV, but they didn't do it.
Well, yeah. Well, everyone needs a fur coat for sure. So,
it's wild,
especially in the southern states. So, look, there's so much to talk about. Tell me, the world is consumed by these apps and these, direct models. How does Credit Karma and how do you distinguish that from a real tri-merge and the bureaus? Can you give me an idea?
Yeah. So, Credit Karma, since the internet, the internet and a bunch of other things and apps and everything ties into, your identity now, right? So you're giving information in to get something back. But Credit Karma and Credit Sesame and all these other ones, those credit reports that they use are consumer modeled, right? So it's not like a FICO. You have FICO, which is Fair Isaac Corp. It's a private company. It's what all the banks use, right? You hear FICO. That's what the banks use if you're getting a loan or you're getting a car. Anything of significant finance, they're going to go through FICO. Now they have all different versions, just like Windows, back in the day it was 95 and 98. And, so same thing happens with FICO. I think we're on version 10.1 or 10.2.
And what are the bureaus and how do they really report differently, if at all?
Yeah. So the bureaus are, they're independent of FICO. All FICO is taking an algorithm that takes all the data from the bureaus. That's all the bureaus do. They just report data. Mm-hmm. So they charge creditors, whether it's a penny or 2 pennies, to report that credit information every month, right? So you have credit cards, you have, all different types of
mortgages,
trade lines, let's go through a slew of them. First, you have revolving. So that's anything with a changing balance, right? So a credit card, you have $1,000 balance. Let's just say your minimum's $30. Well, when that goes down to say $500 balance, maybe your minimum is only $20. So anytime your payment changes, that's revolving debt. Revolving debt isn't as significant as installment debt. Now, installment debt or installment trade line is anything that stays the same, and most of the time it's something bigger. What do I mean by bigger? Your mortgage, right? You have a $500,000 mortgage that shows up as a $500,000 trade line, and it's an installment. So that installment is going to be the same on most loans. You have some other, type loans that maybe they, at least in the past, I don't know, you'd have to ask a mortgage guy, but in the past they had stuff that would calculate and be interest only. And it was the, you probably remember the name, the pick a pay, and it was based on LIBOR. So I don't even know if that exists anymore, but most of the time, all installment loans, they're going to stay exactly that payment stays the same. Here's the big deal with installment and also revolving. If you go late on a revolving, it doesn't hurt you as much as if you go on an installment. So if you go on an installment, you're looking at 50 to 100 points sometimes, depending on how many trade lines you have. Revolving's 30 to 50. And the explanation for that is if you know your payment and you pay, and you owe 400 and you don't make that payment, you knew it was 400. If it was revolving, it could change, and you could have more easily made a mistake, and they don't value it as much, which is kind of weird, but whatever.
Right. And why do you think it is that lending institutions place so much value on your credit score?
It's a pretty good, judgment of, how you live your life, right? If you're sporadic and you have a terrible score and you don't pay your bills on time, you're probably going to do the same with a mortgage. Yes, there's exceptions to it, but if you're a repeat offender and if you're, continually getting collections and charge off and judgments, and, they think the same thing's going to happen to them. So, in times, especially now when, we've been through it for 17 years, there was no equity in homes. So of course they have to go by something, right? To value whether or not you can pay the debt back. So that's right.
There are things like a death or a divorce, and of course, COVID. What have you seen COVID done to credit scores and explanations?
It hasn't. Again, I think a lot of it's going to start now that some of these, and you know better than me, the laws of New York that we've talked about before, but some of the foreclosure and eviction laws and, a bunch of that stuff is now coming to, I guess, there's no longer protection as much. So you're going to see a lot more issues happening, I think, with COVID. And some of the other things is, what we've done in the last 2 years, a lot of the ups and downs. I think people have saved money. They've jacked up. The statistics aren't as bad as, when a few years back when we were using a lot more credit cards and a lot more credit. So it's not as bad as it seems. But I think just because of some of the things taken away and the people now have to start making payments again, or at least they've collected during it, you might have some issues.
Interesting. Well, I know that insurance has become credit driven. That was never the truth before. What are your thoughts on that?
Well, it's been that way for a long time, especially car. Each state has different, policies towards it, but the 50 states currently, and they're looking at changing it, are basing, your insurance premium on your credit score. If you have a, very high credit score, let's say above 740, 720, somewhere in that range. The scores go from 350 to 850. I've only seen an 820 as my high score. I've never seen an 850. But if you're in that upper tier, your insurance can be $80, $90 cheaper a month.
Big difference.
Than somebody with a 550, right? That's a lot. It's a big difference.
Well, naturally the question is, how can you help someone improve their score to, improve their purchasing power of everything from cars to houses?
How the bureaus work and how the laws have been written, there's certain procedures and there's certain paperwork that need to be disclosed. Back in the day, it was written in law that a lot of it had to be physical paperwork. A lot of the stuff now isn't done on physical. They don't have the original. So depending on what, who the creditor is or what the scenario is, I tell everybody the same thing. Everything and anything, as far as bad, good, or, you want to call it neutral, can come off a credit report if you ask, and if they can't provide certain documentation. And there's so many, there's over 4 trillion trade lines within the, the credit score system that they go through in a year. That's a lot of mistakes happen. So we catch them in their mistakes, and in doing so, they have to kind of listen or they get sued. Bringing an attorney in is, we have attorneys. We've, it's more specific, not so much on the trade lines when they make mistakes, but a lot of collection stuff. There's violations that a lot of these creditors do. How many times have you heard, not so much anymore because they've caught on that they'll get sued, but they bother people at their home. They call constantly. They were texting for a while, and give them a cease and desist with a proper attorney documentation, and they don't pay attention to it. They've gotten the drift now, so they do, but there's money still to be made when these creditors, they make mistakes too.
Wow. People don't know they have those kind of rights, and they just naturally in a bad spot, and they take the kind of the abuse or that treatment.
Yep. And that's, I'll even say that to family and anybody else that I ever meet. The credit stuff, if you go late and there's mistakes that happen, in 17 years, I always say it. My wife has been a client 7 times, not because she doesn't, have money to pay bills. She just makes whatever silly mistakes. It's been a while, so I can't use it as a reference.
So maybe you got through to her.
Yeah, I like it was a good thing for, and I wouldn't get that mad because I would always fix it. The last time was a stupid mistake of a Nordstrom's card that she didn't use, not a Nordstrom's, Lord & Taylor, where she used to go to the store and pay it. Well, why would she do that? Because while she was there, she would shop. So
right.
She would pay her card off, go shop, right? And they're no longer in Monmouth Mall. I live in Jersey, so they're no longer in Monmouth Mall. So it wasn't as easy for her, right? Because they closed down. But it was Citibank that issued the card, and I told her what to do. Call the card and explain your thing, and they'll be fine. You've been with them forever. Well, sure enough, they didn't. I told her to get the manager on the phone. And they wouldn't remove it, so we went after them and we did our thing, and it got removed. But that was the last time. But she's had collections, and I tell, as I started the story, anybody that has any debt, before you pay it off in full or before you do anything with it, definitely reach out. If it's not us, but at least reach out to somebody, an attorney that. A lot of this collection stuff, especially if it's deeper and it has been a while, you have statute of limitations, plus the damage has been done. So if you owe a certain amount of money, you might as well negotiate it and negotiate it correctly.
Right. What's the issue? I have so many questions. What's the issue or the importance of not, in a credit card, not paying it off or keeping a certain balance? I'm sure that people talk about.
So that's recently it's been a lot of those, because I guess people have been using some cards and they I don't, maybe for points. I use cards for points and pay it off at the end of the month. So cards only report once a month, right? So when they report, depending on where your balance is, it can seriously throw your score. I have a monitoring, and everybody should, like you mentioned, Credit Karma or Credit Sesame or Hub Wallet. And listen, they're all good for monitoring. Realize that their credit score or their consumer credit report isn't what the banks look at, but at least it's a good guide of where your credit's going. So say your consumer score with Credit Karma is 700. Well, if it goes to 600, something just happened. So it at least will alert you, right? So I of course monitor, and you can tell if I use my balance and they report only once a month. I have some other ventures going on. So sometimes I have a balance where I use to buy things, right? So I'll have a $10,000 balance. Well, if the card reports when I have that balance, it goes by utilization, right? So utilization is 30% of your credit score. Well, what does utilization mean? It just means using what you have available against what you owe, right? So if I have 5,000 available and I use 2,500, I'm at 50%. If I use 2,500, or if I have 5,000 and I use 5,000, I'm at 100% utilization. That's 30% of your credit score. So if you max out cards and then even go above your max, that's going to hurt your credit score, right? So it all depends on when they report. So as long as you know that date when they report, pay it off before they report, so it doesn't affect your credit score. But that's a big one, because a lot of people have last couple of days, I've gotten some people that some of my referring partners or mortgage guys or realtors will call up and say, hey, I have a client, they need help, they need 30, 40 points. Okay, well, I need to see the report like a doctor, right? Once you look at the report, you can kind of tell what can be done quickly. And this last, I'd say, I don't know, 5-6 times in this week, the balances were above 30%. So if your balance or utilization is above 30%, you got to get it down. It's not going to hurt you at 30%. Anything above 30, it will bring your score down. But at 30, it's pretty fair. It'll keep, if you're at 700 and they're reported at 30%, you're at 700. The second you get down to 10% utilization, your score is going to go up a few points, depending on how, many other trade lines you have. But here's a trick. If you need 1 or 2 points, don't pay your balance off in full. Leave $5, leave $10. Your score, again, a couple points. Why? Because now you're showing that you can manage your debt. Right? Strange little tip.
That's some real inside information. What about, I know that, does Better Qualified offer the monitoring as well on a monthly basis?
We do. We have a monitoring, and again, all monitoring, I wouldn't say is exactly the same, but it really is. It's not my systems that run it. It's all off the central databases of a few companies. But again, if you're not monitored, you're just waiting. Most people now are monitored due to their credit cards, like they have free services that they can do. But if you're not monitoring your credit, your identity theft, as we all see, and especially all what's going on in Russia and Ukraine, that the hackers are always out there. And they're just waiting for the moment to use it. So unless you're monitoring through either your bank or some sort of monitoring service, you're waiting for disaster. And the biggest thing is to be not, being proactive, of course, but knowing once something happens, because you can't prevent it. I mean, you can prevent it if you freeze it, right? What does a freeze mean? You're going to put in, well, there's ways to do it. There's easy ways to do it. If you just go to BetterQualified/safe, which we can talk about later, but it'll tell you how to freeze your credit. And freezing puts a lock on, so nobody can issue any type of financing unless you give the authorization prior to. So they give you a 4-digit PIN. It's real quick. And at that point, I tell everybody now, if you don't need anything, if you're not buying a house, or if you're not going to buy a car, you don't need any credit cards, you should lock it. In the old days, it used to take 72 hours to unlock it. So, say an opportunity came up and you needed to open you needed 72 hours. Now it takes less than 24 hours and it's pretty immediate.
Interesting.
Yeah.
I know that Better Qualified got heavily into the business credit. So tell me, how that could be utilized by someone who's in business.
Absolutely. So a lot of the, again, I said in the beginning, a lot of the mortgage people, a lot of the more, the real estate brokers or even agents have their own businesses. They might have it for another business they're in because, listen, we're all entrepreneurs. We're all, business owners, and you have a tax ID when you set up a company. So knowing that your tax ID can do everything and anything you want it to do, like your social security number for financing, but they're completely separate as long as you build them. So, most people don't know what to do. You ask them if they have business credit, and I've had a lot of people say, yeah, I have business credit. I have a credit card with American Express in my company name. Well, that doesn't report the way it needs to build credit. It's, again, tied to you personally, because most of the time, I'm thinking every single time with American Express, you're personally guaranteeing it. With the trade lines we're building, or the trade lines you're building for your business, these are tied just to your tax ID. So you're not personally guaranteeing it. It doesn't show up on your credit. So if you have a car in your company name, which you should, that debt is on your company. It doesn't show up on your personal credit report. So that debt doesn't show up on your personal credit report.
It would seem much more natural to set. You have separate bank accounts. Why not have a separate credit source? That's
and it gives you, again, it's giving you the opportunity to do certain things in your company name, right? And not tie your personal. So 80% of companies go out of business in the first 5 years. So if your company goes out of business, you're not going to damage your own person. And again, not to say it's a loophole to get out of it, but everybody that runs a business knows that you're not taking a shot, but why affect you personally? It makes it that much more bearable to start and run with it.
Right. Well, that's, I love to hear the in-depth nature of this business, which I got to think, because everything is so tech-based and so cross-referenced, this is never going away. It's going to get even more relevant to your day-to-day.
Yep. And it has been. And I tell everybody, it's not that difficult to do if you know what, there's something I learned from, maybe, Greg Reed, Scotty, but one of my favorite lines that when I first met him was, seek counsel, not opinion. Well, seeking counsel is somebody that's done it before. So just pay attention to what they are. An opinion is somebody that really hasn't done it, and they don't really know what they're talking about. In the business credit world, seek counsel, which is us. And it's just so simple to set up, different trade lines under your tax ID. Once they get set up, you spend a little bit of money. They report. That builds your business credit. Now you have a score. And on business credit, it's not a FICO from 350 to 850. It goes from 0 to 100 with D&B, and Dun & Bradstreet is the biggest one. Once you get to 80, then you can start to do other things in your business's name and get bigger trade lines. What do I mean by bigger? The available credit. So, and it's kind of, I don't want to say cookie cutter, but if you have the secret sauce and you know where to go, I just rely on the businesses to do what, even if it's you, Scott, and I say, hey, you got to go shop at Staples, you got to go spend $50, or you have to go to Office Max and spend $50, or you have to go to Amazon and spend $50 because it's always $50. They report and you're going to continually pay it off. You're not going to hold the balance, you pay it off. And in the end of the day, after you have a score of above 80 and you have an Experian, they're the second largest reporter of business credit, and you have a decent business credit score, then for the ultimate lines of credit and some, other purchases in your business name, let's just say commercial properties, what are they going to ask you for? Depends what kind of revenue you got. Well, if you don't have the proper revenue, then let's take a peek at your business and what are you doing? What else do you need to get to a certain revenue to get a loan? Well, it all depends, right? What kind of business you in? And a lot of times I play, and we've been around, right? So I don't want to say I played devil's advocate to it, but someone that needs money for certain things, or somebody they need to put money in, or they need 50, or they need $100,000 for advertising marketing. I'm saying, okay, well, explain to me what you're going to do with the money. And a lot of times, a lot of people, I don't want to get suckered, but there's a lot of, things out there that if, again, you seek counsel, you can avoid a lot of those costs and get things done for a lot less. So you don't need as much money.
Yeah. I know you folks drove around with cars that you got through your business credit.
Yep. Yeah. We still, at one point, we had 6 cars on the business credit. And, our greatest employees sometimes didn't have a great credit score, of which it took a little while for them to fix it. But in the meantime, I would get a car for an employee. It's fun.
Yeah,
the first one we got was a kind of funny story. And it came from a client. I didn't know, this is, I got to be 7, maybe 8 years ago, that you could get a car in your tax ID. Everybody told me, oh no, you got to get on your social, whatever. A client called in and thanked us and said, yeah, I just got a car on my tax ID. I said, what? You did? Where? Well, it's in Freehold at a Chevy place, and the sales guy's name is Joe Torre. I said, Joe Torre? Oh,
not Joe Torre. Not different Joe Torre.
Oh, hey, he's good. So, but of course, the first thing you say to the guy is, "Oh, you must get that." Joe Torre. Oh, yeah, you must get that a lot. He goes, "Yeah, I get that a lot." But it came down real quick to a conversation about 30 seconds where I said, "I don't believe you." He said, "Well, send over your tax ID and your address and your company name. We'll run a report and let you know." So, okay. Writes back, or I think it was at this point it was email. I said we got pre-approved, or we were approved, not pre-approved, for any car up to $50,000. I'm like, come on. So my partner Paul, we laughed, and I still didn't believe it because I figured you get in the sale, you get in that finance room, and they, pull over. Well, we still can give you this, but you have to sign this document, whatever. And so when we first got, because we went there, the guy said, "You're approved. Just come to the lot and get a car." I'm like, "Paul, we're going to take one car. I'm going to leave you there because they have to give us a car," right? Kind of a joke. And when we got there, same thing. We felt him out. "Oh, you're approved. Why don't we go to the lot and pick a car?" So we walk out to the lot, and I still didn't believe it. He didn't believe it. And he goes, "You have a choice of all these cars." And the first car we saw was the Chevy Tahoe. It was blue. It was light blue, like our logo. And I look at Paul. I said, "That's the car right there." And still, because we were joking around that we didn't really think we were going to get the car. And we ended up getting that car, but it came down to, getting into the back room, and the guy kept going. "You got it. You got it. You got it." Had a couple fees on top of it, which we got removed. But in the end of the day, we still didn't have keys to it. And I said to Paul, "Paulie, I think, we're all good." I pulled him aside. "I'm leaving, bro. So, this is it. If I got to come get you again, just text me. I'll come get you if they pull some other, before you get the key." And I'm driving down the parkway, from Freehold back to the shore where I live. I love my beach. And he calls me up and says, "I got the car. I'm driving it home." I'm like, "Come on." And from there, we just, the business, it was, I don't want to say it was a belief, but it became, how many friends could I possibly call and say the same thing to? And we all started getting cars. And
I remember the Equinox.
Yeah, that's what did I say? Tahoe was the Equinox.
Oh, okay. It was like brownish, tannish or something, yeah. Gold.
Yep.
You said Tahoe. Yeah. Well, listen, that's great to learn about credit. I know, I want to switch gears heavily here. I know that I'll tell our viewing public that Eric is the most heavily networked gentleman around. He works in great regard to lenders, agents, regular people. He's really well respected in his market. And I know he's in Jersey and New York and Long Island, known as a good guy. So Eric, I know he's a road warrior too. There are times when I run home and he's already staying out late some places. So tell me, what it is, and why you network, and what do you think the value is, and what do you gain, and what do you offer?
Absolutely. So, with networking, and again, doing it my whole life, I've worked for one company which was UPS after college. After playing football in Germany, I came home and I don't want to say stuck in that job, but it was like I was trying to make my mother happy, and then got stuck in that job for 18 months. But after that, it taught me a lot about, working for either yourself or working for a company. And, working for yourself, you always got to be networking, because you never really know, I don't want to say the next back when I started, there wasn't the internet, but now you have the internet, and that's why we're on this now. But, seeing people and touching people, that's, the fun about it. And I've always said in networking, not so much. And again, you have a lot of networks out there that you've seen that come right up to you. They're in the business, and next thing you know, they're asking you for business. If you have a house that you need to sell, I've had people say,
Sure.
okay, right? No, I like to, network for listening of somebody's at my door. Kind of how I can help somebody. And that's how we built Better Qualified from the beginning. It was, first credit, but then it became business credit. Then it became some marketing stuff within the business credit world. I love to be able to be that go-to guy. And if you have the go-to, you have enough things to, I don't want to say poke people with, but kind of listen and figure out what somebody needs help with. And if you can help somebody, it leads to so much more, especially if you can do it, I don't want to say on the cuff or for little or no money or less than what somebody else is doing, that, they have no idea that, it doesn't cost that much, and it's an eye-opening experience. Everybody's going to reciprocate, especially if it's, if you're valuable, and that's it.
Mm-hmm. Sure. I mean, that's something that I learned a long time ago from being in business networking organizations and conferences and educational sessions, and being with you and people who are really powerful in the respective markets. And I want to tell you that I'm happy that I can invite you, someone of real quality and value, to this platform I put together. An associate broker, I needed a way to meet more people, and I needed a way to give before I ask, or offer before I make a request for business. And we're in a local business networking platform in wherever we are. Eric's, national, but most people who work in real estate as lenders, as home inspectors, as insurance guys, or even the trades, or your DJs and limos, they don't go 3 hours away. Everyone needs to be local who provides that type of service. And it is my belief, and if you marry up the law of reciprocity, where if you were to offer people a way that they could benefit, invite them to a local platform, they're on Facebook already. Someone like Eric, who's southern part of Jersey, if he is active in offering the local merchants and the moms at school and the friends from golf, or people who he's worked with in the past, a chance to promote their business, they're going to naturally see that he's someone to be attracted to without asking. I mean, that's the real point. I think that we should be in a position of, especially if you're using digital media like we are, you're not buying someone a steak dinner. You're giving them a chance to benefit in something that you created. The host of this platform will be Eric. And when he invites local business owners or real estate agents who want to maximize their exposure, it's because he realizes that they gain and they meet no more people. And if you meet more people and you give them a chance to benefit, we all benefit. And that's what's fun. We're already on Facebook. You're already carrying around a phone. If you were to slice away a piece of Facebook and make it your own, just like Eric has and just like I have, you can give others a chance to benefit by collaborating with their contacts. And you're seen as a giver. You're seen as a source of value, and you come from a place of contribution. And it really, I made up a hashtag, stop the chase. Eric said he's at a networking event and people pounce on you. They don't know what you do. They don't know what you have. They don't know the value you can offer them, but they want something. And that's an attack mode. There's an attack, and it makes no sense to come off that way when you could be seen. I mean, I view Eric as a source. He knows tons of people, and they have a great impression of him, and he provides a great service. So that's where that opportunity can be transferred to anyone who's participating in this opportunity. We're happy for that. It's good stuff.
That's it.
Yeah. Well, I mean, in this industry we're in, it's become so credit based. To me, I mean, when homes are when you're making an offer, and here's the value Eric has. If you're a buyer's agent working with a buyer, I mean, you really should have your stuff buttoned up, because the lenders are savvy as can be now. And a listing agent with this market, and they get multiple offers, how can you possibly compete, hope to be successful in making an offer if your credit is less than stellar and you're competing against people who've got those 800 scores.
Yeah, I mean,
something
you're the master of real estate. I've met many, and Scott's he's just Scott. He digs and he knows the answers to a ton of stuff. If he doesn't,
I like to think I have an insight, but you know what? I've watched this real estate business networking for so many years. And, an old expression that I heard in the 90s was everything works and nothing doesn't. So if Eric never goes to a networking function and stays home, never will work. He does a lot. Other people do something. Other people do less. Everything works. But we now have a way to scale your presence. This is a video. It's preserved forever. It's Eric's to be on his social media and within his own local business development platform, which he offers to others. So why not offer others a digital position in something we already have? So Eric has a restaurant and he's inviting his important people to his separate catering facility to another place where it's just Eric's or just ours, and there's gain there. So thank you, Eric. We're in a video series, so we're going to do this weekly, monthly. They're going to have a meeting. Eric's going to have a group of people who he invites to promote their business, and those people invite theirs. So we'll have a bunch of people here, and lenders that work with Eric, and realtors and individuals can have the same thing. And Eric's really the source, and he put a stake in the ground and makes this opportunity available to others.
That's it. So what I like also is people are the groups are, the people in the group or the part of it are vetted, right? So, there's a lot of different categories and a lot of different businesses within communities, and Scott and the rest of the group, we test them. I don't mean test, sure. We use, I would only recommend somebody that I used on most everything if I can use it. Right. And if they're great, mm-hmm. We know what we're doing. We get excited about things because we've been around long enough to, there's ways to do business. There's ways not to do business. So,
Well, you also
breaking up.
Also want to, of course, people use the expression, like, and trust. But one of the ways to be known is to be the person who gives. And keep in mind, this platform, PlugIntro.com, is invitation only. There's no one searching for this. This is Eric's platform of his own. If you're here, you were complimented, you were honored, you were included. So someone thought enough of you to even warrant an invitation, and then an opportunity to meet the people who all have been vetted and are experienced and capable. So look forward to more meetings with Eric once invited, and Eric will give us more information. We'll have some guest stars of lenders and realtors, and we'll learn how they utilize business credit or credit repair and transactions in their local markets.
That's it. Thanks, guys.